Let me tell you, it was a week of pure chaos. I mean, every single headline was screaming sell, and it felt like the market was just teetering on the edge of a cliff. But what happened next? Well, it defied all logic. So let's break down what really drives the market. It's a story of fear, a shocking recovery, and the one group of people who saw it all coming.
All right, so picture this. There's just absolute panic in the air. It feels like the floor is completely falling out from under everyone. You couldn't escape the headlines, and they were just one gut punch after another for investors.
Okay, so first up, this geopolitical bombshell drops. All the talk is about a potential war with Iran. Now, this is the kind of news that doesn't just make waves, it sends a tsunami through the entire global economy.
And what happens next? Well, you guessed it. The immediate consequence is that oil just skyrockets, blowing past that $100 barrier. And for businesses, for you, for me, that just means higher costs on literally everything, which of course fuels these massive fears of an economic slowdown.
So, with all that fear swirling around, what do you think happened? Exactly, a full-on market crash. Portfolios were bleeding red, and the dominant feeling everywhere, was that this was it. It was all over. But then, just when it seemed like all hope was lost, something pretty incredible happened. These dip buyers came storming back, and they changed everything. And they did it in a single week. I mean, the turnaround was just unbelievably fast. So how? How did that even happen?
Talk about whiplash, right? We went from total doom and gloom to sudden euphoria. And it all hinged on one single announcement that flipped the entire story in an instant.
So what was the one thing that flipped the switch? It was this: President Trump's announcement of a ceasefire with Iran. The thing that started all the panic, that immediate threat of war, was suddenly, poof, off the table.
And the market, it didn't just react. It went absolutely ballistic. We're talking the Dow Jones soaring over 1,300 points in a single day. Just think about that for a second. One of the biggest rallies we'd seen, and it wiped out all those recent losses in a flash.
And you can just imagine it, right? There was this massive collective sigh of relief. It felt like, okay, crisis averted. The danger's gone. Everything's back to normal.
But hold on a second. If you actually started to dig a little deeper, past that big, flashy rally, well, the numbers just weren't adding up. You see, the real problems that caused the crash in the first place, they hadn't actually gone away. Something was really wrong with this picture.
Okay, look at this. It lays out the whole confusing mess perfectly. On one side, you have the good news, right? The ceasefire's announced, the Dow goes to the moon, the market recovers. But then you look at the bad news, the reality. The Strait of Hormuz, that critical choke point for oil, still closed. Oil itself, still trading way over $100 a barrel. And to top it all off, the new inflation data came in, and it was even worse than anyone expected.
So this brings us to the big mystery, doesn't it? If all the fundamental underlying economic stuff was still looking so bad, why on earth did the market pump so aggressively? What were we all missing?
Well, the answer? It's all about understanding who's really pulling the strings in the market. This isn't about your average retail investor reacting to the headlines. No, this is about the real game, the one played by what's known as smart money. So who is this smart money? Think of the huge players, institutional investors, the big hedge funds. You know, the ones with super deep pockets and research teams that dig into everything. See, they don't just react to the news, they position themselves ahead of it. And in this case, they had already bought the dip before a single word about a ceasefire got out.
So what did they see that we didn't? They were looking at these key technical indicators, signs of real strength just under the surface. For instance, the S&P 500, which is a really broad measure of the market, had quietly crossed back over its 200-day moving average. Now, for traders, that's like a massive green light, a huge signal of long-term health. And they also saw strength in key stocks, with a giant like Broadcom jumping 18% in just 2 weeks. They knew the foundation was way stronger than all the panicky headlines were letting on.
And there's always a but in the market, isn't there? Just when you think you've cracked the code and figured out the game, the board changes. The story didn't end with that big rally. A brand new fear was waiting right around the corner, proving that the narrative is always shifting.
And sure enough, that Friday, the market got shaky again. The Dow dropped 270 points, and a big company like Salesforce took a significant hit. The reason? A totally new story popped up. This fear that AI could actually start to replace software companies. And just like that, a whole new wave of uncertainty hits the market.
So, this entire roller coaster of a week,
what does it really teach us? Well, it reveals the market's biggest, most fundamental truth. And it's the lesson that separates the smart money from, well, everyone else.
Here's the first part of it. The market does not reward fear. Simple as that. Selling in a panic, reacting emotionally because the headlines are scary, that is almost always a losing strategy.
And this is the other side of that coin. The market really only rewards one thing: moving first. It rewards conviction, it rewards preparation, and it rewards the ability to make your move before the narrative becomes obvious to the rest of the world.
And that leaves us with one final thought, and it's really a question for you to ask yourself. In this crazy, volatile world we're in, are you just reacting to whatever news is flashing on your screen, or are you preparing for the next move that nobody sees coming yet?